I'm joined now by Nick Smith, who is Japan strategist at CLSA in Tokyo. Morning, Nick.
Good morning, Jim.
Big moves around the world in government bonds overnight. We've been talking about that earlier in the show, particularly in the US, but also in Japan as well. The yield on the 10-year Japanese government bond now almost 0.8%, highest level since September 2013. What impact is this move that we're seeing in bond yields, Treasury bonds and JGBs having on Tokyo markets?
Yeah, I guess that's woken up a few economists. The default state for an economist is to say that things aren't going to change in Japan. And we've had a move. I was saying a couple of days ago, there's 23 basis points upside to the yield curve control ceiling at 100 basis points. I said we did the last 23 basis points in 9 weeks, so it's going to be a sexy 9.5 weeks ahead. I think that we'll hit 100 basis points on the 10-year, perhaps by Christmas. But you can see that the buying by the Bank of Japan has tapered somewhat. The shorting by foreigners has significantly increased, and so first of all, that makes you think of the finance stocks in Japan, particularly the banks. They trade around in lockstep with the Japanese 10-year bond yield, and so that's makes plenty of sense when you bear in mind that the BOJ's basically had its foot on their throats for 10 years. So finally, they've had no EPS growth for 10 years. Now they'll be allowed to do so. Mm-hmm. Obviously, it's got implications for the currency, but I would say no. I think you've got the arrow of causality the wrong way round. That the yen's now pushing on 150. We know that straight intervention in the markets has historically done next to nothing. So now over the years I've been since 1990, Japan's done 98 trillion yen worth of intervention, affects usually hours rather than days. And so intervention doesn't do it. The only way of doing it, dealing with things, is by letting Japanese rates drift up, which seems to be what's going on at the moment. I think they'll take out yield curve control at both the long and the short end, quite possibly in January, but certainly by April.
It's a big risk, isn't it, being short the yen at these levels, because all it needs is one statement from Governor Ueda to say that we're thinking about exiting the ultra loose monetary policy sometime in the near future, and the yen is going to shoot up.
Well, I think that's the case at the moment, and the frustrating thing is that the BOJ has certainly not been a good communicator recently. So each time it's made the move, it's defied expectations. I must say, I on both of the times it's moved yield curve control ceiling, I was saying they're going to move it up, but I think the market was frustrated about the lack of good communication.
I mean, this is all brilliant, though, isn't it, for the Japanese equity market? You've got interest rates that are negative, real rates very low. The exchange rate has plummeted. Great for Japanese stocks. What are they up about 25% so far now for 2023?
Yeah, in yen terms, they're done very well. So if you're a smart guy like Warren Buffett, you finance with issuing yen bonds, then you're going to have a great Christmas. Yeah, I think I certainly rub our clients' faces in the story that I'm paying 0.345% on my mortgage. What are you paying? And that's in a cut. And that's in a country where inflation, ex fresh food and energy is 4.3%. So money is slightly cheaper than free. So it'd be churlish not to take advantage of it.
I mean, the irony is inflation in the US is actually lower than it is in Japan, isn't it? Whereas if you looked at interest rates, you would never believe that.
Yeah, I mean that's the one thing you really don't hear from the journalists is that all the fuss they're talking about inflation elsewhere, it's actually higher here in Japan. But the trouble is, of course, that that wages haven't moved in Japan for 30 years, so it's really weighing on the support rates for the government at the moment, and they'll pass that pressure on. The central bankers always like to pretend that they're engineers, but they're really ultimately at the whim of politicians, and the pressure ultimately gets fed through.
The other statistic that I'm interested in, that I saw you quote in your recent report, the Japanese market cap, it's about 5% of global market cap. It used to be over 50%.
Well, it did, and so you see these ridiculous charts in the papers where they say, "Well, Japan hasn't got back to where it was in 1989," and of course, anyone who was there at the time says, "No, that was La La Land at the time. It was absolutely fantastic fun, but it's probably the biggest bubble in human history." And so, in terms of equity prices have come down, profits have come up, and now they're very much backed up by earnings, which wasn't the case before. I mean, the Schiller uses his price to 10-year average earnings and says, well, the US is expensive at 30 times. And I go, yeah, but in 2005 we're trading at 120 times in Japan. So basically the market was being held up by brokers hyperbole, and luckily we got away with it and kept our jobs.
Yes, I remember those were the good old days, although what Japan's doing at the moment might create a new bubble.
I think if you wanted to create a bubble, this is how you would do it. I mean, giving money away in quite the way that they're doing with banks at the moment. I mean, when I signed my mortgage contract, there was 7 of the bankers sitting at the table in front of me, and I'm going, that's just wiped out all of your profits on this for 10 years into the future. I mean, ultimately, I think lending at these rates is just inviting problems for the future. But with a little luck, we'll be on our beach with drinks with umbrellas in by then.
And presumably now that Japan is out of deflation, this is good for Japanese companies, and it's good for their profit margins.
It is. I mean, I saw some delightful economist being interviewed on television, and he was being asked, what's so bad about deflation? The prices coming down is a good thing, isn't it? And the poor dear couldn't explain himself. But obviously that crushes the profitability of companies, and also makes their debt bigger and bigger. And so they cut their spending to bring their debt down. That causes supply and demand to fall apart, and prices drop further, makes their debt bigger, and you go into a vicious circle. So, I mean, deflation is like the sort of the Schwarzschild radius around a black hole. Once you get inside, it's really difficult to get out of it. Japan's managed to get out of it. Not everyone should assume that if they get into it, they'll be able to get out so lightly. But yeah, thank God we're out of that. And the result is that profitability has exploded upwards. So I show a chart of profitability going back to the 1950s and say it always peaked at in previous cycles at half the level it's at the moment. I'm not saying it's good; it's still lousy, but it's at least double what it was in previous cycles. And I think the escape from deflation is a major part of that.
This is almost the perfect holy trinity, isn't it, for Japan? You've got profit margins increasing, earnings increasing, forecasts for the economy being revised up, a weak currency. It just seems that everything is in favour for Japanese stocks at the moment.
Yet and yet we've got people profit taking at the moment. Yeah, I mean, I think the situation's reasonably good. You've always got to keep in mind that this is a deeply cyclical market. I believe that there's enough from the country belatedly coming out of hibernation to cushion us from the global situation. But global growth has slowed, and the situation from here is all down to whether you think that the US has a hard or a soft landing, but this time around, China's not going to bail us out.
How exposed is Japan to the slowdown in China?
a lot of people seem to think, yeah, it's all Asia. They're interlinked. If you look at it, the Chinese GDP forecast has been slashed this year. The GDP forecast for Japan's been significantly lifted. Same's happening with profit forecasts, consensus forecasts for Japanese earnings. They're getting revised up day by day. The numbers keep going up. What I find is people misunderstand the GDP numbers that show trade between Japan and China. Of course, the trade between Japan and China is basically Japanese parent trading with Chinese subsidiary. But if you want to sell in China, you make in China. Otherwise, what you send to China is stuff to snap together and send to rich countries in the West, like North America and Europe. So ultimately, the really important thing is North America, and it doesn't make so much money in Europe, but Bidesa ex-China is hugely important also. I think people overestimate the importance of China in the profit mix for Japan. Not for Germany, but certainly for Japan.
And what sort of state is the Japanese consumer in? In China, the consumer is pretty gloomy and is really pulling in the horns. What's the Japanese consumer doing? Because if I look at the PMI numbers that came out at the beginning of the week, they look pretty good, don't they?
They do. So if you listen to economists, and I had general advice against it, they're pretty negative on Japanese consumption. I look at the consumption monthly series and say it's got a hell of a lot of upside to the average for 2019, even more upside to the long-term trend. It's depressed at the moment, but usually you look at the manufacturing PMI. This time I think I'd recommend, because of reopening, to look at the services one, and that's surprisingly strong. That suggests to me that there's some very positive things in the pipeline for the service sector, and therefore I suppose ultimately for consumption in Japan.
And also, what about Japan's demographics? We're hearing a lot about demographics from the World Bank at the moment. They're pretty gloomy on China, very positive because of good demographics in South Asia, in India and Bangladesh and Sri Lanka. Japan's got a shrinking sort of population. What's the impact of that?
Yeah, I mean, economists, bless them, think that if only the world had more people. Obviously, in was it 1932, the world had 1 billion by had 2 billion by 1970s. It was it 1973, 4? It got to 4 billion, and now it's last November it passed 8 billion people. Think of that report from Oxford University saying 47% of US jobs are vulnerable to automation and AI. Well, obviously, population is increasingly a millstone, not a merit at the moment.
Okay, well, Nick, it's always good to talk to you. Thank you very much indeed for that. That's Nick Smith, who is Japan strategist at CLSA in Tokyo.